Hey all, welcome to ShareTreck. This is the weekend review, 1st of April 2022. And we're going to look at what's happened throughout the week and what's likely to happen the next week. So let's get started. So last week, the markets surged almost 8% and recovering all the losses from the preceding 2 weeks of decline. That probably came due to Russia's ongoing war in Ukraine, raising oil prices and planned federal rate hikes that were well telegraphed in advance. However, if you look at all the positives that led to some of the gains this week, some of them are the effect of the announcement of stock split by Amazon and Alphabet, the 20-to-1 stock split, and we also have in play stock split from Tesla and Apple. So all those things started registering in the market, and there was a good bit of positive optimism. And the reason stock split generates some kind of enthusiasm is because it helps the retail investor to invest in these shares. And shares like Amazon and Tesla and Alphabet, they were all in four digits numbers in terms of prices. Like Amazon, for example, was around 3,000 plus, and Alphabet was 2,800 or something in that region. So when these companies, which actually move the indices, are out of reach of the retail investors, they lose out on an opportunity. However, a 20-for-1 split brings it well within the range of a retail investor to be able to own these shares and take part in the profitability and gains, capital gains that accrue from the business out there. And therefore, that creates greater participation of the retail investor in the indices. So this is one of the reasons why a stock split is a really good news. The other reason why a stock split is good news is because it indicates that the company is confident that they are able to generate more profits and justify having more equity shares around, and they are confident about the prospects of their business going forward. So all of this creates a good positive momentum in the market, and all this positive momentum is fighting against the negatives that are coming from the fact that there is high inflation, there is the high oil price, the Russia-Ukraine tension. All those things are weighing on the negative side. It's like a tug of war between these two forces, which is pulling the markets up and down and creating the zigzag lines that we see in our price charts. And if we look back to what else happened last week, Russia was promising to reduce the hostilities at the advent of the Turkey talks. And it said that it's going to reduce the hostilities, withdraw some troops as a goodwill gesture while the talks started. But for a short while, the oil price dropped with the hopes that these things are going to herald something good. But very quickly, the reputation of Russia, basically because of its past actions, caught up. And within a matter of 6 to 8 hours, the oil prices started going up again because most of the economy felt, most of the participants felt that Russia cannot be trusted. And truly enough, Russia had increased the hostilities, and they had taken over the Chernobyl nuclear reactor area, and the bombing of the cities were intensified. So yeah, that's the reason why the oil prices went up. And the next week that was going to come was dependent, that was the current week, we said was dependent on the movement of oil prices. So that's how the last week ended for us. And we ended the last week with the QQQ being at 356.97. That's where we left the QQQ when we finished last week. So fast forward to this week, what we are seeing this week is that profit taking has been reducing the weekly gains that we have had. So when we started this week, we gained a lot, but despite oil price falling, the QQQ or Nasdaq has edged lower, and as of recording, Nasdaq is in the negative, and it's around 2:20 p.m. in the evening on Friday. So that's what is happening when it comes to the Nasdaq, and the stock split mania seems to be picking up because GameStop has announced a stock split, and its share have gained. its shares have gained, and they're doing a bit of fluctuation right now, but as soon as a stock split was announced, there was a huge gain. And the other thing that happens is that Russia has sustained the hostilities, contrary to the promises that it made at the beginning of the Turkey talks, and as a result of which the oil spiked. However, there was talk of EU advancing the Iran deal to a place where it could be signed off. And OPEC also made some positive noises about a slight output increase. Those two factors were a positive, despite the fact that the Russian Foreign Ministry said that it would take a couple of days or maybe a couple of weeks for Russia to ratify the Iran deal. So that didn't hold much of interest for the participants, but the positive vibe continued. And Biden also promised to release 1 million barrels per day from the strategic reserves. So all put together, it brought the price of oil down. And the latest development is that Ukraine seems to have bombed a Russian oil depot. So, as I said before, during war, you cannot believe the news reports because both sides are going to put their best forward. And we have to use our own logic and some kind of validation to try to determine what is the truth. So now the truth, I don't know what it is, but what we are hearing in the Western media is that Ukraine went and bombed those oil depot inside Russia, some 55 kilometers inside Russia. That oil depot is supplying oil to all the military camped around Ukraine, which are currently continuing the hostilities. So it was a strategic bombing. So now Russia is also reported to be saying that Ukraine has bombed the oil depot. So this brings me back to a big question. So far, Ukraine has claimed that a lot of Russian soldiers have died and the numbers have been in multiple thousands, and Russia has denied. So in that way, in a war, Russia would probably deny that their oil depot has been bombed. But in this case, they are accepting that it has been not only been bombed, but it has been bombed by Ukraine. So that brings us to the question whether it's actually Ukrainians who have done that, because the Ukrainian government is tight-lipped about it. They are not claiming that they went and bombed the depot. And for Ukraine, it would be rather crazy to go and bomb the oil depot while the peace talks are going on and coming to some kind of a resolution. So could it be possible that some rebel faction of the Russian army itself went and bombed their depot so that they can be called back? So those kind of things are also up in the air in terms of questions. So at this point of time, we can't believe what is happening in the Russia-Ukraine front. It could be true that Ukrainians bombed it, but they don't want to claim credit for it. But this is a very brazen act on part of Ukraine, especially when the talks are proceeding in Turkey. So it's very uncharacteristic. So given that the Ukrainian government is not claiming credit for the attack, there are going to be other theories out there. And my theory was what I told you minutes ago, and we don't know what it is. So having said that, QQQ is still weak this Friday because all the uncertainties are still intact. So that takes us to the fact that we have had mortgage rates going up as high as 4.5%, and the Dallas Federal Reserve has said that the home price rise is irrational. So this is coming from the Dallas Federal Reserve, one of their research papers. So when you put all these things together, it's a bit scary about what's going to happen to housing market in the US. And when we talk about the housing market in US, the housing prices are rising faster than the market forces would indicate. And they should and are becoming unhinged from the fundamentals. It's the exact quote from the Federal Reserve Bank of Dallas. And when a Federal Reserve Bank makes a statement, I think we got to take it seriously. Other factors that have played a role in pushing the market into bubble territory, according to the Dallas Federal Reserve researchers, is that the pandemic-related stimulus programs and COVID-19-related supply chain disruptions and associated policy reforms. So the researchers specifically highlight the roles of investors who are aggressively buying up homes. So when individual investors start buying up homes, that can definitely push up the price of housing. But again, it would also push down the price of rents because there will be a lot of investors who are going to rent out the properties. We'll have to see how this plays out. But mortgage rate being 4.5, and Fed just in the beginning of having interest rate hikes with 50 basis point hikes coming up in May and until the end of the year, that seems to me that it's going to be a very, very difficult proposition for the housing market, because there would be a much big chunk of a consumer's wallet being taken by housing costs. And I would also add that there probably has been a head fake in the property demand due to COVID-related migration from big cities like California and New York, and also due to the work from home trend, where people found that in the metros, it was costing them a lot of money, and they were in a smaller area with children and working from home. It became much difficult. So those kind of people went out of the metros and went into the suburbs, and they bought a bigger house where they could have a separate home office and work peacefully while the children played in the backyards. Now, as pandemic restrictions are going away and as more and more companies are looking at employees coming back to work, I think the initial demand that was created by the exodus of people from the cities into the suburbs and low-cost jurisdictions like Texas and Florida and other places prompted a lot of builders to start projects. And as you know, constructing a house takes a long period of time. It's not something that happens overnight. So it takes anywhere between 6 months to 1 year to deliver a house. So around the time that most of these new construction is going to be delivered, there is a good chance that most of the people who migrated from the city to the suburbs may probably find their way back. So I'll give you an example of what's happening back in Toronto. The downtown core of Toronto lost a lot of residents, and as a result, the condo prices fell heavily. And Toronto downtown is predominantly condo. Condo prices fell down almost 25 to 30%, and they have more than recovered now. And the Toronto core has got the entertainment district, the distillery district, and it has got a whole lot of theaters, the Hockey Hall of Fame, the CN Tower, everything, and plus a whole lot of nightlife. And it's got a well-integrated transportation network, public transportation network, and there's the downtown vibe. When the lockdown came in, all this vibe was subdued, and people found it much more comfortable going off to the suburb with bigger places. But now that the lockdown is lifted and all theater is beginning to get started, restaurants are open and entertainment has started, and games are started to be played like hockey and baseball and everything. So people are coming back to the downtown core. The rents have started going up again. So I suppose the same thing is going to happen in all the major metros like in New York and other places. So when that happens, if there's an excess inventory in the suburbs and in places like Florida and Texas coming into stream, then and with the mortgage rate going up, there's a very good chance that some people might find themselves having negative equity when the home prices fall, and those people will not be motivated to maintain their mortgage, so foreclosures could get started. So there is that possibility which we have to keep at the back of our mind, because whatever happens with the housing market is going to have a reflection in domestic consumption, because people take money from their line of credit to buy cars or refrigerators or television sets or go for a vacation. So there is a lot of consumption expenditure that comes from the home ATM. Those things will get stopped. So let's keep an eye on that and see where it goes. And then turning on to the crypto sector, Bitcoin ended last week at 44,557. And at the point of recording, right now, Bitcoin is at around 46,400. So it has gained almost $2,000. So it's doing well. Enhanced EU anti-money laundering requirement has had no impact so far. So recently, the European Union passed legislation that requires know your client forms to be filled up and clients to be validated, so that every transaction, whatever may be the amount that's happening in a given crypto exchange, is known to the authorities and can be traced. So as a result of that, it was feared that there'll be a dampening of spirit in the crypto sector, but that doesn't seem to have happened so far. But we'll wait and see what happens ahead. But in my own perspective, I think the formal market and the legal market is a much bigger size than the dark market, which would like to depend on the anonymity. So I think that the gains of having the AML structure put in place more than offsets any losses that we may have, because the shadow economy is moving away from it. And on the gold front, BMO says that the gold will go up by around 8% this year. And all of you who are viewing this channel know my own bullish thesis on gold, where I think it's going to go up to $2,400 an ounce by the end of the year because of the cup and handle pattern that has formed over the last 4 years. And it's a very strong pattern, and I believe that it should go up to much more. So I'm more bullish than what BMO is saying here. And also on related news, a Russian bank has informed that it has sold 1 metric ton of gold to citizens in March of this year. That kind of indicates the value of gold as a reserve of value during inflation and during periods of crisis. So that's coming into play. That proposition of gold is coming into play. And that is also likely to boost the price of gold. And one of the best things is that when the people buy gold, they are no longer tied to the fortunes of the ruble or the dollar. And whenever they find the time is right, they can exchange their gold for fiat currency, and they will still have the value in place. And what I have for next week is that the strong employment numbers that have come out indicate a strong economy. A strong economy means the Fed can feel much more confident that we may not slip into a recession, and therefore they will be in a position to go ahead with their interest rate hikes. So in my opinion, that's a good thing. A strong economy any day is better than having low interest rates. So I like that the movement that's happening out there. And the other thing is that we will have to wait and see what is the Russian response to the oil depot bombing. And it will be felt the next week. So for example, there are two things that could happen. If Russia is confident that it is the Ukraine that has bombed, and it can be proved that it is Ukraine who has bombed the oil depot, then Russia will try to be a bit aggressive in its negotiation. But also it will realize that Ukraine has the capability to strike inside Russia, and it's not just going to be a one-way punching. So that can also soften the Russian negotiation stance. The second thing is if Russia finds that it was not Ukraine, but some internal factor that has caused this problem, then that will weaken the Russian negotiation position, because they would like to get things sorted internally and be stronger and retain the gains that they have made so far. So that will also push them towards an early resolution, some kind of a ceasefire. But if a third country had intervened in this process and bombed the oil depot, then that could be a very different proposition altogether. So I don't know what's going to happen. I'm not a expert in international relationships, but we'll see the response of Russia with regard to the oil depot bombing next week, and that's going to have a big impact on the market. So we'll have to watch out for that. And I think that gold will continue to be strong and consolidate in the next week. So when I say strong and consolidate, I mean that it's going to move in a narrow range, and potentially it could go up, but it's not likely to lose too much. Bitcoin will continue to gain and consolidate. And consolidation means sideward movement and moving within a range, but not dropping too much. So I'm thinking that Bitcoin will continue to stay above 40,000 and potentially try to go above 45,000 next week. And overall risk remain the same for Nasdaq next week. Nothing has been resolved, and the undertone seems to be slightly bearish. However, April traditionally sees major gains, and as I said, the old adage, sell in May and go away. So my plan is still to wait until the third week of April before I start taking profits and take cash and sit in the sidelines. So that is my outlook. And I would like to hear back from you guys about what you think about this video, and what are your expectations for next week. Please put it in the comment. Let's have an interaction. And the more I get to know you, the more I would be able to give you contents that are suited for your liking and your interests. So having said that, if you like this video, please press the like there. It allows YouTube to show this video to more people, and more people can discover our channel. And thanks to all the subscribers who have stayed with the channel so far. We are 374 strong right now, and hopefully we'll grow much more. And if you have not yet subscribed, please subscribe. It's absolutely free, and help us grow this channel. Thanks and have a great day. Look forward to the Saturday special, and I'll see you tomorrow. Bye for now.